Hi everyone, it's your guy here, the unknown trader, okay? And today we'll be looking at something very, very important. And I believe this will make you highly profitable, okay? So, first of all, let me explain that we have three things, okay? We have 3-day rise or 3-day drop, okay? And most of the time, the 3-day rise happens in three ways, or the 3-day fall, or I don't know what you call it, a dump or maybe the pump. It happens in three ways, okay? Firstly, we will have a pump that takes place in 3 days without really breaking up the high or the low of the third day, okay? For instance, as you see here, we have this beautiful pump, and I know some people will be wondering, how do you draw this line? Like, yes, it is a trend line, but for me it's just to show me which side I'm in, because I don't want to be counter trending a strong moving market, okay? I don't want to be counter trending. Actually, let me write it here so that you will see DNC, okay? Do not counter trend. This is all it means, okay? So just want to put it out here so that everyone can see. This line is used to prevent people from counter trending a strong market, okay? Do not counter, okay? Do not counter trend, okay? In other words, don't go against a strong moving market. And you can also use a 20 moving average to help you see which side the move is on, okay? This is highly important because people are trying to counter trend and they eventually get chopped out. So let me just bring in the 20 moving average right now. Okay, I'm gonna bring in the 20. I always wanna make sure. Okay, here it is. So what this moving average does is it actually shows you the direction of the trend. As you can see, this trend is above the moving average, which means if you are selling somewhere here, you are counter trending, okay? So you must understand when you are counter trending and when you are going in line with the trend. Remember, there's a saying which says trend is your friend, okay? Always go in line with the underlying trend, okay? So now we have day one where they pumped the market up, day two where they pumped it up again, and day three where they pumped it up, okay? And these 3 days will come in different variations. I always speak about variations because that's all there is, okay? Everything is the same. The only difference is variations. Remember, I know that people want simple stuff, but if everything remains simple as it is, then the markets will cease to exist. Why? Because it is said that the markets will cease to exist if they do not serve their underlying purpose. And what's their purpose? Moving capital from many and giving it to few, okay? That's the role of the markets. And I know most people believe that, oh, you can actually become wealthy by trading, which is true, but that's not the objective. Hence, you must understand how the few players are moving the market. That is the only time you'll be able to be profitable, okay? So we have 3 days of rise, and I'll tell you why I took this as day one, okay? Because to me, yes, they dumped it, but remember, they dumped it and they just came down and stop hunted people. I'm on a 1 hour time frame right now. Okay, so they just closed everybody who bought here. So this is a stop hunt, as you can see, not because only there is a pin, but you can see they went up and pulled the market up. Okay, and the safest day to trade is on the second day, but in this case we actually needed this day to trade so that we can confirm this day. Okay, so remember, not everything is tradable. Okay, sometimes you must give the market some time or some space to play in, and then you'll be able to get the bigger picture. Don't try to catch everything that's happening. Give the markets time. Okay, let them play out, paint out a picture. Remember, patience pays when it comes to trading. Okay, because it's only patience that will allow you to see the big picture, and it's only patience that will allow you to get the best trades. Okay, remember that. Patience, patience, patience. Without patience, it's gonna be very hard because you're gonna get chopped anyway. Okay, so what I'm trying to emphasize is, if you're trying to catch every move every day, then you're not gonna be a profitable trader, because you're gonna end up being chopped. After this day has traded, then we know that, okay, now this breakout was a stop hunt and it was a fake breakout. Because if you're saying you're gonna buy here, then you might have got lucky, but remember, the market could still have gone down. Okay, because this market was strongly trending down. So we need something called a signal day. Okay, we need a signal day. We need a signal. We need to be sure that the markets are in or have indeed changed directions. I was listening to a video from a very profitable trader called Peter Tudor Jones. Okay, and what he said is he actually wants to catch the low or the high, and he doesn't just counter trend. He uses an EMA of 200. Okay, an EMA of 200. Okay, he uses an EMA of 200. Once this EMA confirms, then that's where he enters. But I believe he's a long-term trader, because if you're gonna be using 200 and you are a day trader, then most of the time you'll get confirmations late, and by that time on a smaller time frame you might get chopped. Okay, so he wants the EMA to confirm that indeed the trend has changed directions. That's when he gets in. Okay, so you don't want to counter trend. Okay, so all the best traders don't counter trend. Okay, they need confirmation first. Hence, we need a signal day. So for me, this is the first. Actually, if you are using a daily time frame, of which you must be able to identify using any time frame, you must be able to know what kind of candle this will be on a daily time frame. All I'm trying to say is, if you look at this, this is, to me, it's a doji. It's a doji. You call it a star whatsoever, morning star whatsoever. Okay, this is a doji on a daily time frame, because this is this you see this actually it's vertical lines. They represent a day. Okay, and this horizontal lines they represent what we call the previous day's high and low. Okay, if you don't have this indicator, I showed you already that you can just come here at the high, do this, and just change the color to black, and then you can put this as dots and just do something like this. You see, it's almost the same. Okay, so I had to get that out of the way. So guys, what I'm trying to show you right here, I'm sorry because I've explained, but it's important. We need a signal day. Most people are trying to do what I used to do, to catch the low and catch the high, okay, which is profitable. But the problem with that is you don't know when the low is in place and when the high is in place. But when you get the signal day, of which here it's a day 2, okay, I told you we have 3 variations. Sometimes we'll have day 1, okay, this will be our signal day. Then we'll have a day 1 of breaking out, which is breaking this level up here, okay, and then we will have a day 2 of breakouts, and then we'll have a day 3, okay. But there are times when they'll use this as day 1, day 2, and day 3, okay, which means we'll only have 2 days of breaking out, okay. But this still is a 1, 2, 3 day pump, okay. It's a 3-day pump, okay. It's just that it comes in different variations, okay. So that's something you must understand. And on a weekly template, okay, because we also use a weekly template where Monday is always the first day. So this is day 1, day 2, day 3, and then Wednesday automatically becomes day 1 at the end, day 2, day 3. So that's the variations we have, but you must understand what is happening. So right now they pump the market up, okay. So I'm gonna call this a pump, okay, pump. They pump the market up, as Stacy says, that everything is a pump and a dump, okay. So now we know that they went up 1, 2, 3, okay, they pumped the market up. So one important thing to note is who has been closed, okay. Let's see, they went for those who were in profit on Wednesday, actually, okay. They went for those who were in profit on Wednesday, and they closed them out. This is amazing, okay, because remember, the market is always after a stop hunt, okay, and this will really help you most of the time, because they will go for those who are in profit. There is no one who will be in profit and will stay in profit for a long time, okay. It's either they're gonna come and scare you out. For instance, if you sold here, then you went into profit, maybe you sold here, and this was your stop loss. So this means you were in profit, in a profit of 81 pips, and when you see them coming up to at this point, you are at a minus, okay, you are at a minus 3 pips, okay. Obviously you're gonna close when they are coming back, so they scared you out, they served their purpose, okay, moving capital from many to few. And they always don't want to go with those who are right. If you were right, they're gonna come and shake you out of the trade, okay. That's guaranteed. They will come for you, okay, either to scare you or to take you out. So who was closed? For me, I say they closed everybody from last week Wednesday, Monday, Tuesday, Wednesday. But somebody will argue and say, oh no, these ones are not yet closed, okay. And remember, the point is not to be correct or to argue, okay. Rather, what we want is to understand what's happening, okay. Somebody's gonna say, oh god, these guys were not closed, because you can see there's a pin and we still have about, let's calculate, we have about 5 pips, okay. We have about 5 pips, okay, fine. Let me bring you something that most people don't understand. You see this picture right here, this is the back end, okay, that they use, okay. Remember, this is MT4 for us traders, but those who are moving the market, they have a different side. They can see how much is where, how much is where. They see all the stops, they see how much it is, and if it's more than what they need, they'll just go and stop everybody out and then go in their intended direction. So look, you see this is spread, okay? They can actually increase the spread, okay? So guaranteed, when they got to this point, they knew that, okay, there will be orders somewhere here, okay, of people who sell orders above here. So they don't really want to let go of everything they grabbed here, okay, or everything they grabbed here. So those who are trapped here and are in a negative, and those who are trapped here, there are people who sold somewhere here. So everybody who sold here, if they come and actually go back like this, you find that, okay, they are gonna release many people. So what do they do in that case? They use spread, okay? Steve always says they have an extra hand called spread, which allows them to grab everything above or everything below before they go. So you see, they can simply increase the spread. I told you they will always use spread against you. This is one reason I hate a demo account, okay? Because on the demo account, everything looks simple, okay? Everything looks simple. There is no spread. They don't waste their times actually using spread on a demo account. Remember, demos are made to attract you, make you feel comfortable to open a real account. And once you are comfortable, that's when they will that's when you'll open an account and you'll actually execute real trades. That's when your capital becomes insignificant to them, because if you're using a demo, it means nothing to them, okay? So they will obviously use spread against you. Not only spread, I'll show you other things as we go, but always remember, they will use spread against you, okay? They will use spread. They will use it. And usually for those who are trying to catch news, unfortunately, this is what you're gonna get. They'll give you a spread of over 20 pips, okay, and your order will be fulfilled way too far from where you executed it, okay? So yeah, this is an unfair game, I believe, but yeah, it's reality, and welcome to reality. They will use spread against you. So guaranteed, all the guys here have been closed, but they don't want to bring prices to this point because everybody who was trapped here will be released. So if you know how greedy these market movers are, then you'll understand why all these things make sense, okay? They don't want to release those who are trapped, okay? They don't want to release those who are trapped. They don't want to release these guys here, but they want to grab everything that's above. They want to close everybody who was in profit, but they don't want to release everybody who is in a loss, okay? I believe maybe one day, and just maybe, the regulators will take this into account because it's now an unfair game. But if they do, then they will just take the ability from those who move the market to actually use the market against people, okay? So they might not do that. It's an unfair game, and this is reality. We have to face it, okay? So that's it. They use spreads here, okay? So now let's go to a 15-minute time frame and see what really transpired, okay? Let's see what transpired, okay? Okay. As I showed you, I'm gonna remove the sessions right now because I don't really like them. Why? Because they make my chart look ugly, and I've already mastered the times. So if you haven't mastered the times yet, then you'll need that. For me, I spent almost all my time on the charts, okay? Day and night, it's the same thing. I'm always on my charts, so I know where my times are, okay? I know my times, okay? So yeah, so as you see, I'm just gonna bring in for a moment the numbers, okay? This is a sweet spot, and I don't want it to be much visible, okay? I wanted it to be slightly visible, okay? And here I'm gonna use a setting of 1 for my 50s because I want them to be different. Okay, as you can see, I say this is a day 1, and I'm gonna show you why I say this is a day 1. Okay, day 1. Okay, just want you to understand. Oh, the size is not good. Okay, this is a day 1. Okay, day 1 here. Okay, good. So what I'm gonna do is I'm gonna pull this here to day 2. Okay, this is a rise. Okay, not day 1, day 2 of breakouts. No, this is just days for rises, because this is something I need to know. Okay, there are variations, as I always say, and this will become my it's gonna be okay, first green day, for people to understand it better, because I believe people are well aware of the first red days, first green days, and all sort of stuff. Okay, so this is what we have right now. We have a first green day. Okay, so we have our low here. This is our reference point if they are gonna dump. Okay, and we already know that they've closed everyone from Wednesday, so we know that, okay, Monday, Tuesday, Wednesday, we know that everybody from here has been closed. Okay, we know that everybody here has been closed, so this is also our reference point. Okay, so let's see what really happens. Okay, the reason I took this as a day 1 is because if you're gonna use your box, and you please use what you understand. Okay, don't try to replicate everything I'm saying. Just understand it and make it your own. That's the only way you'll be able to get it. Okay, practice it, but make it your own. Okay, if you look at this day, this is 50s. As you can see, it's the price. That's the price. This is the price. Okay, so this indicator is nothing fancy. It just shows me where the whole numbers are. So as you can see, this price is 1.0850. This is 50. If we go beneath it, it's 1.0825. This is 25. So the move actually began in between the 50s and the 25 and ended above or in between the 50s and the 25. Okay, so this means this move has moved over we can say almost 200 pips, but we need levels. Okay, so let's see. The first day they moved 25 pips. As you know, these boxes are made of 25 pips. Okay, let me just try to show you. Okay, for those who are still new, this is roughly 25 pips. Okay, so actually not roughly, it's actually 25 pips. So the first day they pumped the market 25 pips. Okay, the following day they pumped the market 25 pips, and these are the boxes that the price completed. Okay, the price completed, and on the third day they moved the market again another 25 pips. So what did they do? They moved the prices 3 levels of 25, which is now 75 pips. Okay, and where is the move failing? It's always important. Always identify the box where the move starts. It starts here. And always again identify the box where the prices fail. How do you know that prices failed? We're still coming to that. Okay, so okay, we have our first green day. Okay, good, because they went down and they pumped the market up. Okay, the market opened here and closed here. Okay, yes, it opened high and closed lower, but you have to understand the psychology. They went below to trap more traders. What were they doing? They were sending people down again. Okay, sending people down, and then they reverse. Okay, look at this day, they drove people down. Okay, and then they came and closed just near the breakout, and then this day was just a trap. It's almost like an inside day, because we know inside days are traps. Okay, it's almost like an inside day, just slightly breaks the low enough to close these guys out, but immediately reverses. Okay, so this is a first green day to me. Okay, you must understand variations, they're not gonna make it always perfect. Somebody's waiting for a first green day like this one. Well then, you must understand what's happening. Okay, understand the psychology and practice and make it your own. Okay, because if you are looking for something very much perfect, then you are gonna get it on rare instances, and that means you're gonna take very less trades, and that is a good thing, but always understand what's happening. This to me is a first green day, which makes it a day one of rise. Why? Because they pumped the market 25 pips. Okay, it rose 25 pips, 25 pips, 25 pips, and now we are on a day 3 of rise. Not day 3 of breakout, day 3 of rise. Okay, so what do they do? And remember, on the bigger picture, let me do something again. On a bigger picture, okay, this is day 1 on a weekly template. Okay, this is usually, I will just say 1. Okay, this is day 1. Okay, this is day 1 on a weekly template. Okay, it's day 1, and then this is day 2. Okay, this is day 2 on a weekly template. Okay, and then this is day 3 over here on a weekly template. Okay, so you must understand all these things at the same time. Yes, it's something complex, but it's better to understand. Okay, and then eventually we start counting again. This will become a day 1, this will become a day 2. Okay, and the last day, which is Friday, will become a day 3. For all currencies, no. Okay, understand what's happening. Okay, let me just, okay, this is on a bigger picture. Okay, so we have day 1 of pumping it up, day 2 of pumping it up, day 2 of pumping it up, but not day 1 to 3 of breakouts. Okay, just pumping it up. Variations, always think about variations. Remember, it's not going to be as perfect as you want, hence why they use variations. Okay, because if every time they give you breakouts, you're gonna cram them, and you're gonna be able to identify every move they make. Okay, so on a bigger picture, this is what we have on a weekly template. Okay, so let's proceed. I want you to understand, hence I'm spending a lot of time on this. So when you come to the 3rd day, yes, we are looking for 2 things. It might continue to a point whereby it will give us a day 3 of breakouts. Now it's gonna be a day 3 of breakouts. Okay, because when we look at breakouts, this is day 1 breakouts. Okay, day 1. I know this is gonna get more complex as, yes, expected. Okay, let me just give this a degree. Okay, this is, I'm gonna put this as 45 degrees. Okay, because yeah, nah, 25 is ugly. Oh, 45 is ugly actually. Let me make it 30. I don't know, 30. Oh no, let me make it 20. Sorry for spending much time. I just want my charts to look good and not be clustered. Okay, good. This is day 1 of breakouts. Okay, and then this is gonna be day 2 of breakouts. Okay, this is gonna be day 2 of what? Breakouts. Are we always gonna get day 3s? No, that's why in this case we only have 3-day riser. Okay, so these are things you must understand. This is day 1 of breakouts. Why? Because they broke the previous high. Okay, they actually broke the previous high. Okay, so these are the things that we must understand. Variations, they broke this high, and went up to break this high. So what did they do? They broke this high. So yes, breakout traders are in the market. Who are breakout traders? Mostly those who use trend lines. Like, okay, there are people who will say, oh, this is a trend line. Now they've broken out, they pull back, and they're expecting the market to go up, and then again they will put lines. Or even those who are using a daily time frame, okay, daily time frame, they'll see this as a breakout. You see that people will see this as a breakout, and they will want to continue going up. Okay, so you must know that markets will always trap. Okay, so we have 2 days of breakout traders in the market. To have 3, no, we have 3 levels of rise, 3 pushes up, okay, and we didn't go to the 3rd day, okay, which is still good. Okay, I hope so far everything is clear. Okay, I hope it's clear, because I've tried to make this as clear as I can. Okay, I tried to make it as clear as I can. Okay, so now let's look at what's gonna happen. Now we are gonna bring market structure. Remember, on the 3rd day, that's when most things are gonna happen. If we continue to have another day of breakout, then that's when we'll have day 3 breakouts in the markets. Okay, and that's when we might see a big reversal. However, this is still 3 days. The move started on Friday, continued on Monday, and then continued on Tuesday. Those are 3 days. And then on Tuesday, actually, what happens? This market was just going up and up and up. Okay, now we have a break in structure. You know that when they break this level, this becomes the high, and the previous low becomes the recent low becomes our current low. Okay, so what we have right now is we have this. Okay, this is our low. Okay, and this is our high. Okay, so they broke it, and eventually when they break it here, now we have a new low. Okay, so this is break of structure on the inside. Let me blow this up, since someone say they use like candlestick pattern. They pay attention to the candles, so they want the charts to be big so that they can see. Okay, so fine, now we have a break in structure on the inside. Okay, and this is nice, guys. I told you we don't want to be counter trending a strong move. Okay, look, we have a market that is going up. Okay, now we are inside the EMA. Oh, we were inside here. Yes, we were inside, but understand that the market was still building up. Hence I say not everything is tradable. Wait for it to play out. Okay, because most of the time you can expect maybe 2 trades per currency pair. That's when you'll be able to get only the best. Okay, don't expect to take USD today, tomorrow, the day after tomorrow, actually every day, because you're gonna end up taking garbage or nonsense or whatsoever it is. I took that, I did that, I was there, and I have my fair share of experience on that. Okay, doesn't work. So we have a break of structure. Now market structure is playing a role. Okay, and then once they break structure, okay, you see they broke structure, they are also now on the other side of this line. They are inside their EMA, but we're not gonna take this immediately when it breaks out. Why? Because they will always punish breakout traders. Okay, that's why most of the time the market breaks out, pulls back, and trends. Okay, so immediately when we see that, okay, now we have a change in structure, that's when we shift to a smaller time frame. And as you can see, on a 5-minute time frame, now everything is blown up. So I just have to reduce the sizes, I guess. Okay, everything is now blown up. Okay, which time frame do I prefer? It for entry, usually, honestly, I use the 5 minutes and the 1 minute, and sometimes I also use the 15 minutes itself, because You have to understand that you're not gonna get the same things on all time frames. Okay, each time frame will have its own advantage, and sometimes the 1 minute will give you a clear or a better entry than the 15 minutes. Sometimes even better than a 1 minute. Okay, because we want to be sure first. Okay, so now it has broken structure, and after breaking structure, what do we expect? We expect a pullback, and this is what I love a lot. I want to see something like 90 degrees. This is a pump back up into the inside to punish breakout traders, and then we have a drop. Okay, I always want this 90 degrees. Okay, that's for me personally. I want to see this 90 degrees. Okay, that assures me that I have a pump and now I have a dump. Okay, now if you go to a 1 minute time frame, this is where things get a little bit more interesting. Okay, this one went vertical, but most of the time it will go like this. But anyway, it's gonna give me a 90 degrees. Okay, and that's what I always want to see, a 90 degrees. Is it 90? Yes, it is 90. Oh yeah, it's 90. I always want to see this right angle. Okay, kind of thing. For those who did geometry, okay, this is a right angle. Okay, that's what I want to see. Okay, because now it assures me that I have a pump and I have a dump, and I always want to write what I see. Okay, because I want to be certain that I'm doing the right thing. Okay, so when I see this mini pump, I want to write out that I saw the pump. Okay, and marking charts is very important. Okay, because you will be able to identify what's happening. We have a pump. Okay, and this is okay, this is our low. This is where the pump began. So mostly I want my entry inside this. Okay, and I must always get an engulf that I don't compromise. I might compromise everything else, but not the engulf. Okay, not the engulf. Why? Because the engulf tells me that there are shifting zones, but in this case I wasn't gonna enter on a 1 minute. Okay, why? Because you see, now we have this pump, and when we come back to a 5 minute, it's blown up. I told you I use different time frames for entry because each time frame comes with its own. Now I believe I can delete this line because I used it to see the side of the trend, and now I think we saw that it has broken and all sort of things. Okay, so now I believe I can delete it and I can go back to my 5 minute chart so that I can see things clearly now. Okay, and then I have my pump. Okay, and I'll always write it again. As you can see, it's deleted. I'll always write that I have a pump right now because I always want to see these things. Okay, I have a pump, and this is the last hour actually of the session. It's the last hour of the London session. Okay, and it's Euro USD. It's obviously gonna give a good trade during the London session or during the US session because it's Euro USD. It's a London currency paired with a USD currency. Okay, so fine, I have my angle, and on a 5 minute chart I have my engulf. Okay, let's look at the times. Right now the time is okay, it's only 10 minutes after the last hour, which is perfect for me to enter this market. Where do I put my stops? It depends. If I want to use a bigger size, I will make sure that my stops are tight, very tight, but I don't want to keep them like 3 pips because spreads. Okay, so 13 pips for me for this trade will be too much. Okay, yeah, I'll be happy with keeping it 10 pips or even less, okay, because I believe this should go immediately, okay, because if they've already broken up and given this pump, why should they pump it again? If they do pump it again, then obviously I was wrong. And more especially after giving an engulf. An engulf shows that they are now shifting the zones away from those who follow this as something that's still going up. So immediately, if they go back after this engulf, then I'm wrong. So I would really want to keep my stops very tight in this case, okay, maybe 8 or 7 pips, okay, because I know that when I enter, the broker will take its fee, and if I'm entering here, I might get filled somewhere here, okay, because the broker is actually taking its fee. So my goal actually is to get filled inside this 25 pip box, okay, because the move failed on this one, so I want my entry to be within this box, okay, within this box, then I'll be able to take it at least 50 pips, okay. So I want it to be within this box, and as you can see here, I tried my best, but because of the broker fee, which some brokers will keep it as 2 pips, 3 pips, whatsoever it is, I was filled on the lower box, but it's still okay, okay, it's still okay. So for my profits, usually I will say 50 pips, but you can also now use a range expansion, okay, and this range will be from this current low where the mini pump began, okay, to this high, okay, and then I'll just like pull it up like this, and I will take usually for me, it's if this box is small, maybe 25 pips, I will take up to 3, because that's 3 levels, okay. So for me, my take profit is 3, but usually what I want to do is to, from the 3, I want to take out maybe 5 pips, okay, maybe 5 pips, because I don't want them to just come to my position and then pull back, okay. Yes, so basically this is where my take profit will be, okay, and I do this if I'm using the 3 level, okay. But if it's something big, more than 25 pips, maybe 30, 40 or whatsoever, I will usually take an expansion of 2, okay. So but if it's within this box, let's just say 30 and less, I take 3. But if it's above 30, most of the time I will take 3. But again, it also depends on the size of the move. For instance, it will depend on the size of the pump. How did they pump? Do we have day 3 breakouts in the market? If we have day 3 breakouts in the market, then I can take 3 again, because I know that they're gonna be violent when they fall. So this is usually what I take, okay. I want 3 days of rise, and I got it from this one, 3 days of rise, okay. Remember, there's always a catch, something will always be hidden, hence why it's okay, let me give you the properties right now, because there are some people who will need to know the expansions, okay. You can just be okay as I'm saying this. So this why this was day 1, day 2, day 3, there's always variation and something hidden, okay. And I'll be making videos about this continuously, and I'll put it in a playlist, okay. I'll have all the setups, and I'll have different playlists so that you can understand, okay, because that is important, okay. So if you want to make this this expansion, just go to your Fibonacci, come to levels, med 0 with 0.0, med 0.5 with 50, and then 1 with 100, 2 with 200, 3 with 300, 4 with 400, but I usually don't use this one. And we're gonna have some more values if you are setting it from start, or if it's the first time setting it up, just delete the remainings. You can just have these ones, it's fine. I repeat again, the first one is 0, paired with 0.0, and then the second one is 0.5 paired with 50. The third one is 1 paired with 100. The third one is 2 paired with 200, and the last one is 3 paired with 300. These are just expansions. Okay, I want to take, it's the same distance from here to here and to here. Okay, because I've read most books which says if there is a consolidation, just take two. Your target should be the distance and times 2. So yeah, but knowing that usually they use 3 levels and the number 3, that's where the third level comes from. Okay, so make sure you mark your charts. That's important. I can't actually emphasize that enough. Make sure you mark your charts. You know exactly what's happening and you know exactly what you're waiting for. Okay, and this, as you can see, this becomes day 1 breakouts. Unlike here, this is not day 1 breakouts, it's only day 1 rise, day 2 rise, but this one is day 1 breakouts. Okay, and this is day 3 of rise, but day 2 of breakouts. And now here we have day 1 breakouts. Okay, I know that most people won't understand this at first, but remember, this is the low of the previous day, and this move goes vertical. What does it do? It breaks the low of the previous day. So yes, now we have a day 1 breakout. Where is the breakout? Here is the breakout. Okay, here we didn't have any breakout. As you can see, the low is here and the high is here, so we didn't break it going to the opposite side. Oh, and if someone asked me why it broke out here, why didn't I say breakout or whatsoever it is, then I don't know, it's another story. Okay, then you have to watch more videos to understand. Okay, so now we have day 1 breakouts in the market. They broke this level. Okay, now if we were to continue with this move, day 2 breakouts. Once you have day 1, day 2 is a very good day to trade. I told you day 2 is the safest day, but in this case, as you can see, yes, we did get a first trade day, but it wasn't that clear. Okay, it only became clear once this day 2 closed. So some day 2s won't be tradable, some day 3s won't be tradable. Okay, that's the reality you have to live with. Okay, just take what is easy. Okay, because if I was coming here, now I know that they've shifted the zones. Okay, this is day 1, not just the day 1, it becomes a first trade day. Okay, on a daily time frame, let me remove this because I believe you understood this. On a daily time frame, it becomes a red candle, hence we say first trade day. Okay, this becomes a first trade day, and then you mark it. You want to make sure you mark everything. Now this is showing you that okay, the market is also broken down, hence here I told you I want the 90, hence we didn't enter here on this engulf. Because why? We want to make sure that we are on the other side of the move. If you missed this one, it's okay. Day 2 breakouts is the most safest and most profitable day you will ever get. Okay, but this one, unfortunately, reality kicks in again. Unfortunately, let's see how many rises did we have on this day. Let's see how many rises we had on this day. Okay, okay, no, I need a box that will make everything visible. Okay, basically we didn't even complete a box. Okay, we didn't even complete a box, so I'm not gonna use a box here. But there's always a but. Okay, but I can't use a box here. But let's calculate in terms of bibs. They rose 38 bibs, which is more than 25. For us, if it's a strong falling market or rising market, the pullback the next day is gonna be only 25 bibs. Okay, so we need 25. It's also our strike zone. Okay, yes, it reached 25. Good. Okay, So this was the most safest trade you could have taken. Why? Because before we enter, we need to see something called a pump. Okay, it's always gonna be a pump and a dump. Okay, this is a pump. You see, they pumped the market up 25 pips. Which side of the move are we? We are expecting at least 3 days. Okay, is it gonna be 3 days of breakout? We don't know. Okay, is it gonna be 3 days of fall? We are expecting at least 3 days, because that's how the markets behave, market behavior. But we don't know if we're gonna get day 3 breakouts in the market. Okay, we don't know, just like what happened here. But we must pay attention to what happens. Now, what did they do? Let's see. Usually when it falls like this, what I will do is I will just take the recent high and the low, and I'll project them like this. Okay, and this is my area. Okay, I want to see what's happening. Okay, and now what happened? Let's just blow this a little bit up so that we can see what really happened. Okay, yes, they consolidated, they broke to the upside. Okay, and timing wise, during the London session, 7:30, we talked about this time. This is the most craziest time, brings trade. Okay, we talked about 7:30, we talked about 7:30, it's South African time. It's 9:30, just that my broker is behind in 2 hours, hence it's gonna be 7:30. It's actually 9:30 South African time, and it's 3:30 US time. Okay, we talked about this. It's at the high, boom, it falls. But for this one, it's unfortunate. The market is like this. There are days when you won't get what you want, even though it presents very perfect. Why? Because they will use the news. Okay, remember, we say the objective of the market is to move capital from many to few. Okay, so understanding that, how are they gonna do that? They can also use the news. Why? Because this news goes vertical fast. You don't have an entry. Even if we go to a 1 minute time frame, let's see, this is where the first candle closes. It's almost 40 pips. Okay, let's see, here's the pin. It's almost 20 pips. Let's see. Okay, 37 pips. Okay, so where do you enter? You can't enter market that's going like this. It's crazy, because okay, somebody will say, oh, here's a perfect entry. No, it's not a perfect entry. Why? Because the spread will be here and prices will be here. Okay, so we will have a spread of 12 pips or even more. Look during the news, just observe, you will see. So it will make no sense at all to enter here, because if you enter here, your order will be executed somewhere here, and immediately when it pulls back, that means already you are in a big loss. Okay, you are in a big loss. And who knows, maybe you entered on the close of this candle. Who knows, they could have gone back and closed you. So usually we'll take the first bounce, but as you can see, this move has gone crazily. Okay, and if you were to take these railroad tracks, you weren't gonna get paid that much. Okay, so sometimes reality will kick in. Yes, it's true, they will use the news. Everything was so perfect, but the news disturbed us. Okay, so there's no entry, unfortunately, unless if on a 1 minute time frame, unless if they go down, then they come up and up and up, maybe to the breakout point, they come up and up and up, then they fall. Then you can have at least an entry where you can take it to the low, to the recent low. But when it's like this, just accept, or they didn't give you an entry, and that's sadly reality. You're gonna get that most of the time. And for me personally, I wouldn't be counter trending this move. Okay, I wouldn't be. Yes, it gave you a good move, but for me, I don't want to enter into such moves. Okay, I will accept that. Okay, there's no move, and this one gives us an inside day. Okay, inside day represent two things. It's either the following day it's gonna continue, or it's gonna actually do what? Reverse. But this, it's not even an inside day. Actually, this is the day 3 breakouts in the market. Let me check. Yes, this is day 3 breakouts in the market. Okay, we got day 3 breakouts in the market. This is great. Okay, it's not a break, it's day 3 breakouts in the market because they broke out, but not convincing. I will take it as an inside day and wait to see if the following day will give us day 3 breakouts, because it's not convincing. It's not convincing at all. Did it close as a breakout? Almost. So I don't want things that I will have to guess if it's a breakout or not. If it's not convincing, you know, I've said this in my previous videos, that there are many trades I just don't take because they are not convincing. However, even if it's an inside day, you could have got the 3rd day, okay, because yes, we were expecting it to go down, but because of the way it closed, then it's just not a safe day for me to trade. Then I wait for day 3 breakouts in the market. As you can see, they work the low, and then I want to see what happens the next day. Okay, it's gonna close as a first trade day, but this I would mark as a first trade day, as a first green day actually. Okay, and wait for tomorrow to see if my thesis is actually rejected or it's approved. Okay, remember, even in a research, we must have something called a thesis, and yes, in research we actually use hypothesis, but we really want to see if it's gonna get rejected or approved. Okay, then we can continue the following day. So all in all, what I'm trying to show is not every day is gonna be tradable. You can expect at least 2 trades or 1 good trade per currency every week, except of gold. You know, gold can give you almost a trade, maybe 3 trades a week, okay, or even 4 sometimes. But don't over trade one asset, because you'll just get caught in the middle. Okay, so day 2 is the most safest one, but this day 3 is also the safest one. And most day 3s, when they go, they're gonna go from the high of the day to the low of the day. That is guaranteed most of the time. Hence, day 3 trades are highly profitable. So all in all, that's what I wanted to say. And yeah, just master your charts, know what's happening, and yeah, I think in the following one I'll do day 3 breakouts. Okay, day 3 breakouts, because if you can see, let's come back to the bigger picture again one last time. Is it one last time? Yes, one last time. Let's come to the bigger picture. What transpired this week? Day 1, they pumped it up. Monday, Tuesday gives us our weekly consolidation. 1 levels will hold, guaranteed. Okay, most of the time we know that. Okay, so this is a weekly template. They pumped it up, then they pumped it down 1, pumped it down 2 days, pumped it down 3 days, and Friday reversed. But actually this one didn't even reverse, it just did miracles, okay, whatsoever. But you see, if you really want to see the weekly template better and to understand it, just come to the line graph, and then you know, okay, we have a template where they pump it up Monday, Tuesday, the first days of the week. Usually they will send you into the wrong direction, and then they pump it down. It goes down 3 levels, 1, 2, 3 levels. Okay, 1 down, pulls back, 2 down, pulls back, 3 down, it pulls back, and then we expect a reversal. So this is how you can understand a weekly template. Okay, so if we were to count the days where they dumped it, we will say this is day 1 of dump, this is day 2 of dump, this is the 3rd day of dump. It's fine. And then yeah, this is the weekly template. You can just try to draw something like it, then draw how it is, like get a variation of weekly templates. The line graph will give you a very good projection of how the weekly template is. Okay, so most of the time I believe you will get a good understanding if you use the line graph. So thank you.